It's Monday, the 24th of July, 2023. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 big stories to race through in 5 minutes. Let's get going. Story number 1, it is a huge week for the Australian equity market with the unofficial kickoff of the June half reporting season, with miner Rio Tinto reporting on Wednesday.
Investors aren't overly confident about the profit reporting season, with downgrades in earnings expected. While the numbers are based on the 2023 financial year, that's the profit numbers, analysts want to know what companies think are going to happen in this financial year, and that's what will drive share prices. The widely held view is that thanks to higher interest rates and a slowing economy, earnings this current financial year will be lower than last year. It happened during the COVID pandemic, but it's not normal. While top-line revenue will be a focus, analysts want to see companies controlling costs. Not going to be easy given energy prices and higher wages bills and things like that. In terms of falls, energy companies will in all likelihood lead the way lower because commodity prices have come off compared to a year ago. According to UBS, the investment bank, financial materials companies could also go backwards, while utilities, healthcare and industrials should go forward. One I'm looking forward to is consumer discretionary. We've seen a bunch of downgrades in that sector already. Harvey Norman, Adairs, Baby Bunting, Universal, Best and Less, Dusk, the candle maker, my personal favourite. They've all downgraded. It'd be interesting to see what happens.
You are quite fascinated by Dusk, aren't you, Sean? It's also a massive week for the economists because June quarter inflation data is due for release on Wednesday, which will give us an indication of how many more rate rises are on the horizon.
That's right. Consensus seems to be that inflation for 12 months to the end of June will come in around 6.2%, 6.3%. That would put the June quarter inflation reading at about 1%, which would be the slowest increase since September 2001. Market economists think that pace of price increases, alongside last week's strong labour force figures, probably enough to trigger another rate hike from the Reserve Bank, but there's plenty of uncertainty around at the moment. Weaker figures might just result in the bank holding off when it meets next week.
Okay, on to story number 2 now, and investment homes are hitting the market in growing numbers, with higher interest rates and taxes pushing investor listings to near record highs.
Almost 1/3 of all auction listings in Sydney and Melbourne last week were investment properties, according to agent Ray White. Just a week ago in Sydney, at least, that number was just 15%. Investment house Jarden's done some work on this. 40% of listings in Sydney in June were investors, 36% in Melbourne. The selling by investors is helping push up the number of auctions and actually taking some of the pressure off prices. Last week, across the capital cities, 1,729 homes went to market. The preliminary clearance rate was 71%. Sydney's rate was 75% or just under. Melbourne, 68%. Brisbane came in at 66.1%. Adelaide, just under 75%. And Canberra, almost 72%.
Now, this next one's fascinating, Sean. Story number 3, the amount of cash in Australia fell last financial year for the first time since dollars and cents were introduced way back in 1966, with $1 billion in notes disappearing from circulation in the past 12 months.
Michael, we are peak cash, which may be a surprise to many who thought that happened years ago. Anyway, every year since the transition from pounds and shillings to decimal currency, the total value and volume of notes in circulation has increased. But that reversed last financial year with a big fall, particularly in the number of $50 notes out there, according to a story in the Sydney Morning Herald and The Age. Despite the rise of touch and go, direct payment and debit cards over the past decade, the number of notes have actually been increasing. They really took off during COVID. Between February and December 2020, the value of all the $50 notes in circulation jumped by 25%. There was a 15% jump in the number of $100 notes. People were literally putting them under their bed. Anyway, as of 30 June this year, the total value of cash in circulation fell by $1 billion, $1.1 billion, to $101.3 billion in cash, smallest amount since November 2019, and the first year that it's ever gone backwards.
Story number 4, McDonald's Australia will open more than 100 new restaurants over the next 3 years to the cost of around $600 million, as well as upgrade over half its current store network, and that will cost another $450 million.
The strategy, led by new local boss Anthony Martinez, is the biggest expansion plan since the 1990s. It reflects the wave of popularity for McDonald's at the moment, in part thanks to online delivery platforms and rewards programs, according to a story in The Australian. McDonald's wants to take advantage of new innovations such as its mobile app and online delivery, etc. It will open 30 stores this year, double the normal rate. McDonald's Australia aims to lift its network from about 1,020 currently to have more than 1,100 sites around the country by 2025. That would still put it behind Subway, which has the most sites at 1,227.
I never knew that. I'm learning things from you, Sean. Story number 5. London stands ready, apparently, to host the 2026 Commonwealth Games with an estimated cost of £500 million from government. This is according to reports in the Financial Times.
London's Mayor Sadiq Khan is among a handful of city leaders who have expressed desire to host the Games in 2026. London officials estimate the event will cost about £500 million, vastly below figures offered by other prospective host cities, mostly because London has plenty of sporting infrastructure already. A spokesperson for Khan said London stands ready to support if required, but noted that the ultimate decision to bid would be taken by the government. Now, one person briefed on the UK government's thinking said its preference is still for Australia to take up the mantle. Though, Michael, that's unlikely to happen.
Yeah, it's not looking particularly likely. All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Monday, the 24th of July, 2023. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts, and that comes with interviews as well. Today's interview is a fantastic one for investors. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.